All right, ladies and gentlemen, let's go ahead and dive into our afternoon lesson. This lesson will run roughly 15 to 20 minutes. So go ahead and get your piece of paper out. Go ahead and get your pen. And before we do this, let's answer Jay Nelson's question. Is it possible AMC is trying to form a little inverse head and shoulders? So is it possible AMC is trying to form a little bit of an inverse head and shoulders? I kind of see what you're seeing there, buddy. I kind of see what you're seeing, right? So I definitely see that. So again, you have your low point, followed by that lower low, followed by that higher low, right? So you can kind of see that you have a little bit of this established neckline as well. So I can see that 100%. So basically what you're looking for is a break over 41.23, but here's the thing. Let's say it breaks over that resistance. There's a lot of resistance at 41.23. Where's your target, Jay Nelson? Where's your target at? First target, right? First target. And then I want to talk about what are we seeing short term right here? What are we seeing right there? What kind of possible setup do we have? Right? Got a left shoulder followed by the head with a double top, possibly a right shoulder. So we could be seeing a short term 1 minute head and shoulders right here on the lower time frame. Right? But then you open up to the big time frame, you kind of see how you have the left shoulder, the head, the right shoulder. So again, it's kind of like, it's conflicting, isn't it? It's conflicting. Do we have a short term head and shoulders formation, or do we have this bigger term possible inverse head and shoulders to get that break over 41.23? So let's say you like it, you think it's long, you're going to go in anticipating the break of 41.23. Where's your target? First target on this play. Absolutely, right. So you're going to have some resistance right off this intraday high. Right around that 41.88, right? So if you're looking to take this trade, right, you would be getting in around 41.24, looking at profit at 41.88 just in case it gets rejected and moves back down. So you have about 60 cents of profit, right? Then you just have to go ahead and say, all right, 2 to 1, right? My stop has to be 30 cents. Now, is 30 cents too tight of a stop loss to make this a great trade? Always having that 2 to 1 risk reward setup, right? But then one thing to be mindful of is look at this short term possible head and shoulders right here on the 1 minute, right? So you got to be mindful of that as well. If we come down and we start cracking this neckline, we could see it back down towards around the VWAP. So just be very mindful of the bigger picture that you're seeing in the smaller picture as well, to not get in and then only see it in hindsight. Man, there was a head and shoulders here. I should have not taken that trade because, again, there's a little too much confliction. All right? So, get your pen, get your paper, right? And we're going to be talking about my go-to swing trade strategy. We do not see this present itself all the time. This is not something that we see occur every single week, every single month. But when we see this occur, it has high probability of shooting to the upside with very, very, very low risk. All right? I love this swing trade. I took this swing trade last year on SUNW. There was another one last year that I took as well. And I'm going to go ahead and pull that one up. So where's it at? Let's go to the desktop, small account setups. And it looks like this one was on AESE. So we'll come back to AESE here in a moment. But again, I remember SUNW. I took this last year, and it was a very rewarding and a very profitable swing trade. All right? So again, piece of paper and a pen. This is going to be a short-term swing trade. And this is a moving average squeeze. All right? Again, it's a high probability, high reward, low risk swing trade, which I absolutely love these setups. Again, you don't see it all the time, right? We'll get into setups that we can actually trade more consistently for swing trades, all right? But this is something that, again, when you see it, get prepared, get ready, because, again, you can make some really, really good profits, guys, all right? So let's go ahead and look at SUNW, all right? So criteria number 1, right? This is a moving average squeeze. So at the top of your paper, right, I want you to write moving average squeeze. And the 3 moving averages that I use on a daily chart are going to be the 200-day, the 13-day, and the 50-day. Those are the top 3 most popular SMAs that traders use on the daily chart. Now, some use a 20 EMA, some will use a 9 EMA as well. I've come to find that the 13 SMA works the best for me. But again, you could use a 20 EMA, you could use I think it's a 9 EMA as well. But the other 2 that are very popular that almost everybody uses is a 50 SMA and a 200 SMA, all right? So criteria number 1 for the moving average squeeze is you want to see a stock just getting absolutely destroyed. Getting destroyed, getting destroyed, getting destroyed, getting destroyed, all right? And we see a few times that this actually played itself out. So again, we see the stock just getting destroyed, right? We see it just getting absolutely hammered. This isn't the one I traded, all right? This was not the one that I actually had traded. But I'll show you the one I traded, but you can see a few times that this actually played itself out. So again, getting destroyed, getting destroyed, getting destroyed. Gets back above the 13 SMA, right? And we can see this clear as day, that it is grinding 13 SMA. Now guess what? We're back above that 50 SMA, and we have the 200-day SMA as resistance. Again, this was not clear as day, but you can see the criteria behind it. I'm going to show you a not so good setup, and I'm going to show you a clean setup. All right, so we can see here that we've just been downtrending, 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 right? Quite some time. We can also see that we're starting to build on up, right? So we again, lower low, lower low, lower low, lower low, lower low. Oh, we got some higher lows. We got some higher lows, right? We got some higher lows. And we can see how the stock had gotten squeezed between the 200-day SMA, 13 SMA, and you had the 50 curling up as well, right? You can kind of see here that you had the 200-day acting as a resistance right through here, and we also have the 13 looking to cross the 200, holding the stock up, and then at this point in time, you actually have the 50-day cross the 200 to the upside, which helped continue the stock's price to the upside, right? And we can see, so again, criteria number 1 is the stock needs to be getting beaten down. Stock needs to be downtrending on the daily. Just lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. The stock needs to be downtrending. And you want to find a point in which it tries to actually start to reverse, right? And you have some higher lows and higher highs. You want to see that, okay, we've been in this solid downtrend, but now we've kind of leveled out, and now we're starting to slightly build back higher, right? So that's criteria number 1, getting beaten down, leveling out, starting to grind just slightly higher to the upside, right? What we want to ideally see, again, is to have a moving average like we see here, right? We have the 200 resistance. We can see here that we briefly lost 50. But when we push back up into resistance, we formed this higher low above the 13, and look at that, boom. And it grinded the 13 SMA quite some time. You can see that, right? So again, not the cleanest setup, but the criteria was there. 13 SMA crossing over the 200. So even if you miss the initial break of the 200-day moving average, the stock pulls back. And at that point in time, when the stock pulled back, we can see that our 13 SMA is now crossing our 200, and we had a nice pullback right, again, it's never going to tag it to the penny like intraday with a 9 EMA, but we're going to gauge off the 13 SMA if that's the SMA that's being respected. So again, yeah, it didn't touch it to the penny. You're not going to see that 100% of the time on the daily chart, but as price is building above the 13 SMA and it's staying above and it's not breaking down below, it's in play. So stock breaks the 200-day SMA for the first time in quite some time, right? For the first time in quite some time, we actually break above 200-day moving average. That was confirmed on a big green day, and I guarantee if we bring this volume up, where's volume at? Come on, baby. Jeez. We can see here that, okay, it wasn't really confirmed with volume, was it? So again, we had some volume here, right? I mean, this confirmed with volume of 151,000, but in comparison to its average, right? At that point in time, look at the average volume. The average volume is around 25,000 shares. So even though it doesn't look like a lot, the average volume that we can see here during this sell-off from 12.3 for about 4 months, right? 4 months. The average volume is way down at like, geez, was it? 10,000 shares. Not even that. I mean, it's just absolutely low. It was just low, 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 low. I mean, the average volume was not a lot whatsoever, right? So we can see here that we started to build some volume into the 200-day. We pulled back, nice decreasing volume, and look at this volume start to increase along the break. That's healthy, right? Let's say you missed that break of the 200-day moving average, but we just broke the 200-day moving average, the first time that we've gotten back above the 200-day in a long time. Let's say you miss it. Well, look at that nice, healthy, decreasing volume pullback. Right into that previous high, right? And again, it's still holding above the 13-day. So you could have potentially been making entries, let's say right around 419. You missed the break, right? You're not chasing it, but now you know SUNW is above 200-day moving average. And this is the first time the stock's gotten above the 200-day moving average in quite some time. That's bullish, right? The stock is now pulling back on decreasing volume. That's healthy. Holding above the 13 SMA, that's bullish. Pulling back into the previous high, previous resistance as well. Overall, you could have been looking to make entries in the low fours. And I mean, look at this. Look at SUNW just rip and run all the way to $14, right? And then that's when you look left, right? That's when you always look left. I make my entry. Where are my targets? Boom. Underneath some lows. Boom. Right around some highs. Boom. Right around some highs, right? Look at that. That's how you get a gauge on targets. So just like that, you already know where your entry is going to be. Your stop loss is going to be back below the 13-day moving average, as we're now above and building higher lows above the 13-day moving average. We can see here that we're building higher lows, right? Above the 13 SMA. So your goal is to identify your entry, and we just identified our entry would have been somewhere in the low $4 range. We've explained why. The break of the 200-day moving average on increased volume. We pulled back and retested the prior high, and we're still holding above the 13, right? And we pulled back on decreased volume, and we see volume flowing back in along the move. So you already know your entry. Your stop is a loss of the 13 SMA. So let's say your loss is $3.70. Then your first target here would just like how you play your first target intraday, right? A retest of the prior high. 552, you got a first target. And then you're going to scale into all of your other targets until the stock eventually cracks below the 13 SMA. So let's say you scaled, right? Boom. You could be taking profits right there around 552. Next target, 636 based on the daily chart. Boom. Second target, 888 on the daily chart. Boom. Last target, boom, you're getting out at like 13 bucks, and you never once lost the 13 SMA as you were scaling out. So let's say you still had some size on the table, right? Let's say you had 1,000 shares, you took 200, you have 800. You took 200, now you have 600. Right here, you took 200, now you have 400. You took 200, now you have 200. So you were scaling 2, 2, 2, 2. Now you have 200 shares left, and you're unfortunately getting stopped out right here when we cracked below. But you're still making money on those 200 shares, right? Your entry was in the low fours. You're still making, $4 a share on those 200 shares, right? So even though you scaled, yeah, you got stopped out, but you're still up from your entry to when you were getting out of the trade based on the signal to get out, the loss of the 13-day moving average, right? That was your signal to get out, but you were already scaling 2 here, locking in profit. Scaling in 2 here, locking in profit. Scaling out here, locking in profit. Scaling out here, locking in profit. 200% gains. And then by the time you get stopped out on your last remaining size, you're still up 100% overall. So you think of an average, right? You think of an average of scaling out, getting stopped off based on your entries, you're averaging about 100% return on that trade by scaling out and doing it properly, just like we do intraday. And how do we do it intraday? We look left. How did I get these targets? Look, 888, bounce, bounce, resistance, resistance, right? So we know 888 is a good level to take profit. That's why it's a profit target, right? We know that 636 is a good level to take profit. Bounce, 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 right? We know that's a good target level, right? Why did we get a target way up here of around 13? Look at that spiking high. Look at that bounce at 13. Bounced, bounced, resistance, resistance, resistance. We already knew that was a great target as well. So that's it. It's that simple. You still swing trade, like you day trade when it comes to building your plans. Where am I making my entries? Why am I making my entries? We just explained that based on this moving average squeeze, right? Breaking over the 200, grinding the 13 on the way up. You know your stop loss. You know your first target. You know your second target, third target, fourth target. And then eventually you have to get stopped out. Eventually you will get stopped out. And the criteria here is going to be the first candle that closes back below the 13-day moving average. All right? So that's a great way, again, to take a swing trade. It's a moving average squeeze. When the stock has been getting crushed for a long time, we start to see it. Once again, just to clarify, again, I repeat myself a lot, but it's good. Stock is getting hammered. Stock starts to level out, right? Look at this. We're leveling out. We're consolidating. Stock starts to slightly build back up. So from a downward trend, getting hammered, leveling out, grinding back up, back above our moving averages, right? Getting squeezed in between our moving averages. We can see the squeeze, and then we get a break. If you missed it, you got your pullback, and you could have rode that for a nice move to the upside. I never took this, but that was a great example. I'll show you the one that I did take. So again, what do I notice? After that move, getting hammered, getting hammered, getting hammered, getting hammered, getting hammered. Same criteria was met, guys. Same criteria was met. Moving down, consolidating, right? Sitting sideways. We can see that we consolidated for quite some time. Also, we were in oversold territories. We were just completely hammered. We are now oversold, and now we're starting to build back up on the RSI. We're starting to see some strength after we've set sideways. So we already know that it's meeting the criteria. Getting hammered, sitting sideways. Now we need to start to see it do what? Start to slightly build back up and start to see a squeeze between some of our moving averages. Let's see if that played out here on SUNW. So look at this, right? Criteria is starting to be met. We're starting to build back up. Criteria is now starting to be honored and validated for this trade because we are now back above our 50-day moving average. And look, we were below the 50-day since what? October all the way into May. So we were below the 50-day for 6 months. Now we are officially back above the 50-day. Our 13 is now crossing back above the 50-day. We're building higher lows after we were destroyed, after we consolidated, and now we're building back up with some higher lows and higher highs. We still don't have confirmation for the trade. Why is that? Where's our resistance at this point in time? Our resistance is the 200-day moving average. So we have yet gotten a signal to take this trade for the moving average squeeze because we still need to see that moving average come over the top and squeeze it between support and resistance. So let's see how this played out. We're starting to see we're getting confirmation. We're building the higher lows. We need one more piece of validation. So I'm not taking the trade. See, look, boom, resistance. I'm not taking the trade. I want to see the squeeze. But look at that grind. Look at that grind, guys. Right off the 13. There's our 200-day. I'm making entries right now. I took this trade and I'm making entries. I like this. I see the squeeze. It's getting very, very, very tight. Criteria was met to the downside. We had our period of consolidation. We are now building higher lows and higher highs. We are officially back above the 50. We are grinding the 13 SMA, and now we are getting squeezed between the 200-day moving average as resistance and the 13-day moving average as support. And then on top of that, we're looking to possibly break $1, right? We're looking to possibly actually get back above and break $1. So here's what I'm doing. I'm building my plan. All right. Looking to make some entries, right? My stop loss, pretty aggressive on this, 70 cents. I'm making entries at $1, right? Pretty aggressive stop. So I need to get a 160 target. Can I get a 160 target? Yeah, right? Because I can see this target at being 204. I see my first target, retest of that high, right? So right off the bat, I'm looking at a 1-to-1. A 1-to-1 until I get first target. But I can see here that there's a lot of great potential if we look left to get, I mean, 30 cents of risk with potentially $2 of top target. And then I say, hey, we have a gap to fill. So I'm looking left. That's all I'm doing, looking left. Okay, here's a great target, right? Here's a great target right around that 105. Right around that prior high right there, around 128. Looking left, there's a good target around 147. Looking left, there was a good target around 204. So I'm like, all right, I'm making entries right below $1. I'm risking 30 cents. Do I have potential to get at least a 2-to-1? And I can see here that, yeah, if I hit top target, I can get a 3-to-1 setup. Even if I'm taking profit here and it comes back down and stops me out at break even, because when I hit first target, guys, that's what I want to clarify. All right. When you hit first target on your swing trade, you bring your stops to break even. So right off the bat, I know that when I hit first target at a 1-to-1, my stop loss will then go from here right up to break even. So now I'm in a risk-free trade. But I know that I have potential to get 1-to-1, take target, bring stops up, and I know I still have potential for a 2-to-1, for a possible 3-to-1. So that's all I'm doing at this point in time. I see the setup, I see the squeeze, I'm liking it, and I'm building my plan. Stop losses, targets, right? Assuming, okay, I get my 1-to-1, I bring stops to break even. All right, I like the trade because this is a high probability setup. These squeezes are like 80-20 setups. These are high probability setups. So I have an 80% chance that I'm going to win on this trade. We have a lot of different pieces of criteria that need to be met, and they're all being met. Not one, not two, but all 5 different pieces of criteria are being met here, right? So again, I have high probability, even at my initial 1-to-1 target. I like the setup because I can bring those stops to break even and then scale like we're supposed to. Taking profit at 147. Taking profit if we ever hit $2. Taking profit if we ever get up to fill that gap right around 3. Right? Let's see how this played out. I'm long, right? I'm long at this point in time. I know my stops and I know my targets. Boom. Within day 1, I hit target. Look at that. Boom. Within day 1, I'm hitting target on this. Then I'm bringing my stop to break even. Right? So I'm taking some profits here. Stops are now break even. Boom. Look at that. Second target, and fuck, I'm still probably scaling on that. It hit 180, right? It hit 180, right? Even if I didn't take profit, I'm still hitting first target, second target. Now my stop is break even. So I've already gotten rid of maybe 2/3 of my position. So I'm officially in the money, making profit, and now I'm in a risk-free trade. And again, my entry was down here on this prior day. So my entry was right around 93 cents, right? So I went from 93 cents to locking in some profits around 127. I went from taking, profits at 127, locking in profits around 150. And my stop loss is now break even. I'm in a risk-free trade. Let's see when I get stopped out. It's still grinding the 13 SMA. Remember, not only is my stop loss break even, but now if we close below the 13, that's also a signal to exit, right? So right now my stop is trailing underneath that 13 SMA, right? The fact that we have a pop, we pulled back and we're still building higher lows above the 13 SMA, my stop loss is still not break even. Remember, we're scaling. I'm trailing my stop loss right underneath that 13 SMA. So now I'm going in the green on my last bit of my position, right? Doing the same thing. Stop loss coming up underneath the 13 SMA. Right? Ooh, we almost closed. We're not quite closed below, but I'm still scaling my stop loss under that 13 SMA. So now I went from taking profit on 2/3 of my position to now I'm up another 20%. From a $1 entry, right now my stop being right below that 13 SMA is 120. That's 20%. So now I'm in the green completely across the board, and I've gotten 50, 60, 70% profit out of the swing trade, right? Let's see when I get stopped out. I can't remember. There I'm stopped out, right? Right there I'm stopped out. The next day we're below the 13. I'm walking away from this trade, right? I'm walking away from the trade, and look at that. That's why we get out. That's why the second we lose our 13 SMA, and okay, I want to clarify, if it's the 50-day, still, whatever moving average created the squeeze. The moving average that created the squeeze could be the 50. In this example, it happened to be the 13. So we're scaling under the 13. But if the moving average that created the squeeze was the 50, right? You need to use that 50 as the scale underneath. But I'd say 70% of the time, guys, you're going to see your short-term moving average create the squeeze. Because it's the short-term moving average. It's going to move closer to current price action. So 70 to 80% of the time, you're going to see the squeeze occur between the 200 and the 13, or the 13 and the 50. 70 to 80% of the time. So write that down. 70 to 80% of the time, your squeeze is going to occur between 13 SMA support and 200 SMA resistance, right? Or 13 SMA support and 50 SMA resistance. All right, guys? So good stuff. So again, that's how you would take the trade, assess your loss, look at your targets, scale out, taking those stop losses, scaling it underneath the 13 SMA, and this day right here on the 8th, right? On the 8th, that would have been a signal to get out. And then moments later, 2 days later, watch, it dumps. That's why it's very, very important to understand how to scale, especially when you're swing trading. You're not looking to go to the moon, guys. You're looking to make profit, consistent profit. You scale that stop loss. You take profit because guess what? What if you would have bought this and you would have never taken profit? Now you're in the red. Now you just got stopped out, but you had every opportunity in the world to lock in profits. That's how you properly scale out. So this was a prime example on SUNW, and this is actually a moving average squeeze that I took last year, and I averaged about 60% on this trade in less than a month. Tell me anybody that can come into the market and have a high 80-20 probability setup and within 30 days lock in 60% return on their investment. Like, come on. Come on, guys. I invested $2,000. I made $1,200 on the trade in less than 30 days. That was beautiful. That was amazing, right? But again, these setups don't always occur 100% of the time because the criteria has to be met to a penny. And let's go ahead and recap that criteria. Stock is getting hammered to the downside. All right, criteria number 1, stock is getting hammered to the downside. That's number 1. Number 2, stock consolidates. It levels out. Number 2. Number 3, stock starts building back up. Number 3. Number 4, stock regains the moving averages, right? Stock gets back above the short term and the 50-day. Not 100% of the time, but the stock needs to regain one of those two moving averages. If it's both of them, even better. In this case, it happened to be both, which was even better for this particular trade. But the stock has to get back above one of these moving averages, all right, and start building on up. Criteria number 3, right? Start building higher lows, building up, right? Criteria number 4, you need to wait for the stock to get squeezed, right? Look at the stock, right? Think of it like a wedge. Think of it like a bull flag, right? The stock's getting constricted. The stock's getting tight in between a level of resistance and support. The only resistance and support we have on these swing trades is our moving averages. A bull flag, we have our trend lines, right? We got our trend lines. A wedge, we have our trend lines, right? So it's the same concept. It's just a different technical form of support and resistance, right? Our moving averages. So again, the stock is getting tight, getting squeezed, and that's when you start building your plan and looking at your targets. And then again, you scale underneath the moving average that created the squeeze. In this case, the moving average that created the squeeze was our 13-day moving average. So we're scaling out underneath 13-day moving average. Moving average that created the squeeze was the 50-day, right? Whatever the case is, that's the one that you're going to utilize, all right? But again, 70 to 80% of the time, you're going to see one of these two things. Most of the time, your 200-day moving average is a longer-term moving average, so it's going to move further away. So you're really never going to see the moving average create the squeeze from the underneath side. Doesn't make any sense, right? Because if the stock's getting hammered to the downside, your 200-day moving average is curling over the top. It's not as close to the stock to where it gets that curl. Does that make sense, guys? So again, almost every time as the stock is getting hammered, right, your 200-day moving average is far away. So you're going to see something like that, right? You're not going to see it underneath. You're not going to see it close to where it curls. You're going to normally see it rainbow effect. You're going to see it curling over the top. Then you got your 50-day moving average. Your 50-day moving average is going to follow a little bit closer, right? Then you got your 13-day moving average. Your 13 moving average is going to follow even closer. So again, 80% of the time, this is what you see, right? The stock consolidates. That's when you start to see 13 get very, very close and start creeping up underneath, right? You see your 50-day starting to kind of level out. Now you got your 200-day still not reacting as close. Then you kind of get the same effect, right? Stock starts building back up, right? You're starting to build. At this point in time, what do you have? You got that 13-day getting underneath, right? You got your 50-day getting closer and closer and closer and closer. So you could see this squeeze, right? But you still got to be mindful of, you still most likely got your 200-day overhead, right? So even if the stock gets above the 200, now you have even more reasonings for this trade. Because now, look at that. Now you got the 200 crossing. You got your 13 crossing. What else do you have? You still have your 200-day getting very, very tight. And that's all you're seeing, is you're seeing this consolidate and getting that squeeze where eventually the stock gets so tight in between your moving averages where it gets super tight to where it's got to go somewhere, right? The stock was hammered. The stock's leveled. The stock is now building back up. You're already showing bullishness. You're already showing bullishness from bearishness to neutral to accumulation, right? It's being accumulated for a move. Smart money, good traders, right? Smart traders. This is your accumulation period, right? They're accumulating. Now you got people noticing the buildup. Now you get the pop. Now you got retail traders that aren't that smart chasing it. But we're in during the squeeze. And that's normally what you're going to see for those textbook SMA squeeze setups, right? And again, that's exactly how that's going to work on out. So again, I like to give you some live representations, some visual representations, but that's all the criteria that you need to focus on, right? And once again, stock starts moving on up. All right, so let's say, boom, get the squeeze. Well, what's the closest moving average that's going to follow? Closest moving average is going to be your 13-day moving average that's going to follow, right? Because it's a shorter-term moving average. Stock pulls back, and all you're doing is you're looking to scale this trade as long as the 13 respects it. Eventually, it will crack. Eventually, it will come down below, and that's going to signal your exit on the trade. But again, you're locking in a lot of great profits on this trade with a lot of light loss. SMAs, right? So I use, so once again, my yellow line is my 13 SMA, right? My blue line is my 50 SMA. My red line, my 200 SMA. And again, you can see how beautiful that worked out. Squeeze, scaling, you're done. Let me show you another example, guys, of another one that I took. So this is another one that I took end of the year here. And this is one that I think it was, I think it was end of the year. Yeah, it was end of the year. And I actually called this out on social media, and a lot of people made some profits. So again, this was on AESE. Stocks getting hammered, getting hammered, getting hammered. Oversold. That's beautiful. And look at the W, right? That's another thing that you guys kind of learn is when you see W's form like that on the RSI, it's like, holy moly. Let's go, baby. Right? W's and M's. W's and M's. W's are market structure. M's are market structure. W's are support. M's are resistance. Let's keep it simple. So we see that the stock's just getting hammered, 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 hammered. What's in a beautiful little W? Consolidates. Starts building back above 13. See, in this scenario, what was the squeeze formation? It wasn't the 13 and the 200. This squeeze happened to be the 13 and the 50. Like I said, 80% of the time, you're going to see the 13 and the 50 squeeze, or you're going to see the 13 and the 200 squeeze, right? In this example, AESE was a 1350 squeeze. Look at that. Selling off, met criteria. Consolidating, met criteria. Getting back above the 13 SMA and getting squeezed in between the longer term moving average. In this case, the 13 or the 50 SMA. Look at that. Boom! Big time move. Over $1 all the way up to the 200-day moving average. And this was beautiful because that was a great target. A great target was to sell into the squeeze into the 200-day moving average, right? It pulled back. Let's say you still have some on the table. Boom! It pushes again. You're locking in profit. This would have gotten me up. The fact that we were resistance, still respecting the 13 SMA. So again, we're not out because we haven't lost it. We're still scaling, scaling, scaling. But I would have never waited for the stock to crack below the 13. We got back above one of the strongest moving averages, the 200-day moving average. One of the strongest moving averages as far as support and resistance. We got above, and then 2 days later, we're back below. That's a sign of weakness. I'm getting out here, not waiting, because that's already showing me some weakness. You would have been stopped out anyway. But again, I would have been stopped out at the crack below the 200-day moving average. So again, a couple examples. A trade that I didn't take, 2 trades that I did take. You know, how the squeeze forms between the 13 and the 200. How the squeeze can form between the 13 and the 50. And it's all the same criteria, guys. No matter what, it's all the same criteria. So let's take what we just learned and apply it to a different form of swinging, not really utilizing the SMAs in the squeeze fashion, okay? high probability with a moving average squeeze. High probability, guys, right? 80-20 setup, right? I see these trades a lot, not a lot, but when I see them, I take them all the time, 100% of the time. When I see these trades, these swing trades, I'm taking them, I'm alerting them. They are high risk, low reward. Let's talk about another approach without really utilizing a squeeze formation to making entries, right? So I'm going to show you a live example on a swing trade that I'm currently in, right? I'm currently in ticker RKT. All right, let's go to RKT. I'm actually in profit right now. Look at that, guys. I averaged in this morning. You guys heard that? I actually have to go look at my account real quick. So I am, yep, I'm slowly getting back into the green on my swing trade. All right, so perfect. RKT. Why did I take the swing trade? So this is going to be a different approach. All right, guys? So kind of the same criteria. A little bit of the same criteria, right? Stock, and I'm just going to go ahead and remove these drawings real quick. Stock is just getting hammered. $41, getting hammered, getting hammered, getting hammered, getting hammered, getting hammered, right? It's in a downtrend. It's getting hammered. Look at that. It's just not doing anything. Got destroyed off those highs. Just moving on down. Oh, gap down. Pulling back. So first thing that oh, shit. All right, here. Let's do this again. Right here. The first thing I see is, again, getting hammered, right? And I like the fact that we are extremely oversold, right? So criteria number one, stock is just selling off, right? Stock is hitting oversold conditions. I'm waiting for at least a week or two of consolidation, right? So another piece of criteria for this is after the sell-off and getting hammered, criteria one's met. RSI, extremely oversold. Extremely oversold. I mean, it hit 20. Number two, criteria is met. I then need to see it consolidate sideways for at least a week or two. So I'm already saying, okay, I'm looking to go a week out on consolidation. So again, I'm waiting, I'm waiting, I'm waiting, I'm waiting, I'm waiting, I'm waiting. Look at that. I'm making my entries on this, right? I had owned some up here. I had already owned some, but I'm buying more, right? I'm buying more. So criteria is being met. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. 2 weeks of consolidation. What's something else that you guys see that just formed on the daily chart? Not only is criteria one met, getting hammered. Criteria two being met, extremely oversold. Criteria three being met, consolidating for at least a week or two, right? But what's something else that you notice on this that is just really beautiful, right? What's something that you notice on the daily chart that really just says, wow? I wouldn't say an ABCD, right? We're looking at the daily chart. I wouldn't really say that's an ABCD, right? ABCD from, again, what I was taught and how I was educated is you have push, pull, boom. So you have A, you have B, you have C, and you have D. So boom, 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 in a sense. So A, B, C, D. All right, so again, I wouldn't really classify it as A, B, C, D. What I see that I really, really like is what we call market structure. Again, guys, keep trading simple. Market structure. W's and M's, right? Never trust the market when it's smiling at you. You see that? You see how I did that? So never trust the market to the long side when the market is smiling at you. All right? M's, bearish, right? Market structure, resistance, downside, right? W's, market structure off support. W's and M's are just market structure, keeping it simple. All right? So with that being said, what do we see here on RKT? Look at that W, right? Look at that market structure. Look at how, again, all of our criteria is being met. And then add in the fact that we have market structure, right? Look at that. Look at that market structure. I'm buying a little bit right here. I did. Last week I was buying a little bit, right? And then I'm waiting for one more piece of criteria to add more. So again, criteria 1, 2, and 3 was met, right? We have market structure. Typically, I don't buy quite yet, but the fact that we had our 2 weeks of consolidation, we have a W forming, we have market structure, that incentivized me to buy a little bit more of RKT, right? I'm waiting for a candle to close above the 13-day moving average. That's it, right? So I'm accumulating. I'm not going to lie, but I'm not full position yet. I'm not in. I'm accumulating, I'm accumulating, I'm accumulating. I will then increase to a full position once I see the first candle close above the 13-day moving average. Right? So again, I am accumulating. Let's say I wanted to buy 1,000 shares. I'm doing 100, 100, 100, 100, 100, right? I still have 500 shares that I want to take. But I'm waiting for the first candle to close and actually start pushing above the 13-day moving average, right? So I'm accumulating. That's all I'm doing. I went full size on this. So again, 100 shares, 100 shares, 100, 100, 100. Boom. I'm full position size now. So your average cost basis, again, I had already owned some. I had already owned RKT. This is a long-term play, all right? I've already owned some. But again, let's say I didn't own any. I was just simply doing what I do best, and I'm accumulating. My average cost base at this point in time would have been right around this purple line, right? My cost basis is actually right here at, I'm break even. I'm at $19 cost basis because I own some up here. But let's say I didn't own this already. Let's say this was just a pure swing. I would have a cost basis somewhere around like $17.11, right? Again, I'm accumulating, boom, full position size. What's my first target? Well, I'm looking at my first target being right there, 1976, right? Where's my second target? I'm just looking left, right here, $20.89. Then we have that gap to fill up towards 22. I already know what my cost basis is. I know where my stop is. Where's my stop? My stop's right underneath that 1622 low. That's why I like looking for these stocks that are actually getting beaten down and consolidating, because we can put our stops underneath the consolidation low, right? Low risk. Stops underneath that consolidation low. So I'm looking to go long at 17.11. That's my average, right? That's my average after my accumulation phase. I'm looking to stop out about $1 away. And my first target, guys, is 1976. That's almost $3 of profit. So I've already said, I'm in a 3-to-1, right? If I get stopped out, I'm losing $1 a share. If I hit my first target, I'm making $3 a share almost. That's a great risk reward. That's why I've been buying RKT for the past few weeks, guys. You've been hearing me talk about it forever, right? I'll load up Webull and show you. So with that being said, boom, that's it. That's the criteria. That was the last piece of criteria that I needed to go ahead and get my full position. Boom, nice big push, right? Never hit target. I haven't sold yet. Pulling back. Pulling back. Again, how am I scaling my trade, guys? Right? I don't want to see it back below the 13-day moving average. Again, look, we haven't quite lost the 13-day moving average. So right now, the fact that we are back above the 13, I don't care that I haven't hit target yet. I honestly don't care that I haven't hit target because I still need to scale the trade properly. And how do I scale the trade properly? It always goes underneath the 13 SMA once we've gotten above the 13 SMA. Right? At this point in time, right here, my stop loss is underneath that low because we haven't gotten above the 13 SMA. Boom. We're above the 13 SMA. Boom. We're above. Guess what I'm doing? I'm bringing my stop up right underneath that 13 SMA. Boom. 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 Guess what I'm doing? I'm bringing my stop up underneath that 13 SMA. Right? So now I just went from a risk trade. Now I'm slightly break even to where if the swing trade doesn't hit first target and it stops me out, so be it. I'm stopped out, right? But at least I went from losing to now scaling under the 13, and now I'm in a risk-free position. Right now, we're looking good to hit target today. I think I might hit $20 target today, and this is my target, 1976, right? And then what's one other thing that we could be setting up in? Not only is this an accumulation phase with all the criteria being met, right? Accumulation, sitting sideways after being beaten down, oversold, back above the 13. What's something else that we could see set up, guys? Look at the daily chart. What's one thing that you're starting to notice that we literally just talked about, right? What's something that we could see form here coming on up? Right now, again, I'm in a risk-free position. I am risk-free 100% because my stop is underneath that 13 SMA, right? My stop is right there, back at break even. Again, that's under the 13. But what's one thing that we could see actually form here over the next maybe week, 2 weeks? Yep. I mean, look, right? Look at it. Clear as day, right? We have our 13 getting close to the current price, right? And we come here We can see that we have our 13 holding as support now. So what could we see? I mean, it doesn't have to play itself out. If I hit my first target, I'm hitting my first target, and I'm scaling underneath the 13. But what's one thing that we could actually see here? We could see the price get white pin. We could see the price, right, get tight. I've never stopped out and go on a bigger time move and really exceed my target. So now, from something I wasn't even thinking of, at that point in time, guys, I wasn't even thinking 1350 squeeze because we have nothing at that point in time. There's no 1350 squeeze yet, right? There's not. There's just not. That's not why I'm taking this trade. I'm taking this trade because of the nasty sell-off, the accumulation phase, oversold conditions, and then again, I got confirmation to go ahead and go completely long because we broke back above our 13-day moving average. All right? But now, I see that we may have something else coming on up. And this could be my go-to 1350, 200 squeeze, right? So again, we go from I'm in the green, right? It's a profitable swing trade. Again, if you would have not having shares up here, right? I was buying here. I was buying here. I was accumulating this in my long-term account, and I added more. I'm adding 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 more, right? So again, we're not talking long-term investments, all right? We're talking swing trades. A week, 2 weeks, a month, 2 months. A long-term investment, guys, is what? Multi-years. I've been buying RKT for a long time. It's a long-term investment. But just recently, in the same account, I know I normally separate my accounts, but just more recently, I've been accumulating more RKT to kind of bring that cost basis down to do a little bit of a swing trade and a long-term investment. Hopefully that makes sense. It may be confusing. So I'm using my long-term investment account, and now I'm kind of going 50-50 with long-term and swinging because I do like the short-term swing setup that we have, and I still think RKT is a very valuable company. It's definitely more value than $20 a share based on my research and my due diligence, and I like RKT for the long term, right? So that being said, if it wasn't the fact that I was using my long-term account to actually take the swing trade as well, I would have that average cost basis down towards around 17, and we would be very, very close to profit, right? We would be very close. We right now are about 60 cents away from profit. So that being said, that's what I wanted to share with you guys today. I know this lesson was very, very long. 47 minutes in duration. But guys, I like to be very, very thorough. I like to break things down multiple times just to make sure I cover everything to a T and you really understand what we're looking at, why we're looking at it, how to manage your risk, where to put those stops, where to put targets, and some of the criteria that must be met. Because if we can meet 100% of the criteria, we are now getting to an 80-20 setup. We are now getting 80% odds that this trade would work in our favor. And we can see past examples of this working, and we could see live examples of this working, right? I'm currently in RKT. I've been talking about RKT for the past 3 weeks. I was talking about RKT before earnings, all right? So again, not just past examples, but real-time trades that I'm currently in and why I take these swings, because they are high probability setups. And I put my money behind these types of setups because they do work and they generate consistent profits. Do I use different SMAs for swings versus day? 100%. So write this down. Daily chart. The most popular SMAs. And here I'm going to really break this down, Hanner Kid. All right? Daily chart. So write down daily. On the daily chart, we want to use SMAs. All right? That's the most popular. That's what 90% of traders use. On the daily chart, they'll use a 13 SMA. They'll use a 50 SMA. All right? And they'll use a 200 SMA. Intraday, we don't use SMAs. Intraday, we use EMAs. All right, exponential moving averages. Why is that? Because an exponential moving average is going to follow much, much closer to current price, which makes more sense for day traders, day trading intraday price movement. We want a moving average that follows a little bit closer to current price action. So again, SMAs on the daily, EMAs intraday. And what's the most popular EMAs to use? You have the 9 EMA, which I use all the time, and then you have the 20 EMA. All right, I don't need it. I don't use it, right? But the 20 EMA is another very, very, very popular EMA to use on the daily or on the intraday chart. So the 9 and the 20 EMA intraday. Okay. Daily, 13, 50, 200 SMA. All right. So hopefully you guys enjoyed this lesson. We haven't really done a swing trading lesson in quite some time. I wanted to give you past examples of swing trades I've taken. All right. The criteria that must be met, how to look at profit targets, how to set your stop losses, how to properly scale out of these trades as well. And then a more recent trade that I am currently in, it's a little bit different of an approach. I'm not looking for a moving average squeeze, right? I am simply looking for a 1 to 2 week period of consolidation after it's been destroyed and hitting extreme oversold conditions. And we can see RKT met that criteria. Getting destroyed, hitting extreme oversold conditions, consolidating for a week to 2 weeks. The candle closed back above the 13 SMA. And that's what started bringing some hype and some activity back into RKT, because all of that criteria was met to a T. If that criteria is not being met to a T, you don't have high probability of it working. When we check all 5 to 6 boxes for these setups, we check all 5 to 6 boxes of criteria, right? And we can check them all, and they're being honored. We have high probabilities of seeing reward versus risk. 80-20 reward, right? 80% reward, 20% risk. As day traders, we want to have high probability of one thing happening over another. Not 50-50, not 60-40, 80-20. That's how we stay consistent in the market. So guys, this is how I swing trade. The moving average squeeze, we don't see them a lot, right? We really don't see that happen a lot. But when we see it, you best believe I'm putting my money where my mouth is, because those are killer setups, all right? And then we see more or less these types of setups with more midterm swings. So again, classify this as well. Write this down. So the moving average squeeze setup, the first swing trading approach I take, that's a more of a shorter term swing trade, maybe a week or two, all right? Maybe a week or two. The type of approach I take on like RKT, that's not a moving average squeeze. It's more that consolidation, really getting hit hard, oversold, back above the 13 SMA, right? Everything we just talked about, that's more of a midterm swing. So that could last anywhere from 2 to 4 weeks, maybe even 2 months, all right? The way I classify a long-term swing is 3 to 6 months, right? Longer term swings. So again, short-term swing, moving average squeeze. You're looking at a couple weeks. Mid-term swings, like we just talked about here on RKT, 2 to 4 weeks, maybe 2 months at most. And then when we have long-term swing trades, right, we're looking at like 3 to 6 months. And then when we start thinking investing, we're talking long-term, year, 5, 10 years, later down the road, creating generational wealth.